Welcome back to The Explainer. So today is May 18th, 2026. And if you're just glancing at the headline numbers, you're honestly only getting half the story. We're going to dive deep into the data to see why the surface-level price action is totally masking this massive structural shift happening right under our feet. We're talking about a crazy landscape here. Major assets are technically consolidating, while specialized DeFi and privacy ecosystems are just absolutely exploding. Let's get right into it.
Okay, so here's the ultimate question for today's market. Why in the world is smart money seemingly ignoring a $78,000 Bitcoin? Recently, the Strait of Hormuz reopened, oil prices crashed, and it ignited this massive global relief rally that pushed Bitcoin right up to that 78K mark. But here's the kicker. Despite this huge geopolitical relief, capital is aggressively flowing somewhere else. It's not pouring into Bitcoin like you'd expect during a rally like this. Smart money is actively rotating, and we need to look at exactly where it's going. This right here brilliantly illustrates what I like to call a tale of two markets. On one side, we've got Bitcoin caught in this high-volume, sideways macro tug-of-war. It's essentially range-bound, just sitting there waiting for a definitive catalyst. But on the flip side, we're seeing explosive, under-the-radar growth in specialized DeFi and privacy ecosystems. The market is literally fracturing into these distinct lanes of opportunity. So if you're only watching the heavyweights, you are entirely missing the real action happening over in these high-utility altcoin sectors. Let's jump into Section 1, the big money moves, focusing on institutional capital. Now, the absolutely crucial point here is this staggering figure. $500 million. This represents a massive deal that was just finalized by Payward, which, if you didn't know, is the parent company of the crypto exchange Kraken. They're acquiring Bitnomial in a transaction worth up to $550 million in cash and stock. Listen, this isn't just some flashy purchase. It's a highly calculated, strategic acquisition that tells us exactly where the institutional heavy hitters think this market is heading next. To really understand this Kraken acquisition, we have to look at what they actually bought. Bitnomial brings a fully CFTC-licensed U.S. crypto derivative stack to the table. This multi-billion-dollar safety net shows us that institutions are betting heavily, really heavily, that the future of crypto volume lies in regulated, brokerage-grade U.S. derivatives, not those unregulated offshore spot markets. It basically allows Kraken to offer regulated futures and options directly to U.S. clients. And you know what? That perfectly sets the stage and seriously strengthens their valuation right ahead of their potential IPO.
Moving right along to Section 2, smart money seeks utility. The data really speaks for itself here. Smart money is done waiting around for a Bitcoin breakout to find alpha. While the broader market is just kind of hanging out and Bitcoin remains relatively flat, advanced social trading and governance protocols like DeXe have absolutely surged. We're talking a staggering 116% rally in just 1 month. That massive jump has pushed DeXe's market cap well over the $1 billion mark. It is a crystal clear signal that capital is moving into protocols offering immediate, functional utility that Bitcoin simply doesn't natively offer. And leading this whole charge is what we call the agentic economy. Guys, the sheer scale here is mind-blowing. We are looking at a jaw-dropping $28 trillion flowing through this ecosystem. But get this, 76% of it is driven entirely by automated bots and AI agents. It's almost out of a sci-fi movie. These machine-led transactions are primarily focused on shuffling stablecoins around to optimize and capture yield. So we have this massive automated web executing the vast majority of on-chain transactions, while human retail traders are, well, mostly just sitting on the sidelines.
All right, Section 3, the privacy premium, looking at off-grid demand.
We're observing a really massive structural shift in the market right now. Capital is actively seeking out untraceable transactions as a hedge against fractured global financial orders and, quite frankly, intensifying global surveillance. There's this rapidly rising market demand for what we call off-grid financial infrastructure. Actually, scratch that, it's not even just rising demand, it's becoming a core allocation strategy. This isn't just some niche interest anymore, it's a major play for a huge portion of the market looking for true financial privacy. And this is exactly why privacy-centric ecosystems like Zano are trending so heavily right now. Zano leverages advanced cryptographic techniques, things like ring signatures and stealth addresses, to provide completely untraceable transactions. Again, this ties perfectly back to our earlier point. Smart money rewards functional utility. This level of base layer privacy is a utility that Bitcoin doesn't natively provide. So as the demand for privacy goes up, capital naturally flows right toward the specialized blockchains that can actually deliver it. This example brilliantly illustrates the maturing of this entire privacy sector.
we're seeing established privacy platforms really evolve. Take LNVPN, for example. They just completely rebranded to notanota.me, but it's way more than just a catchy new name. They're expanding their whole suite of services to include anonymous eSIMs and Lightning-integrated payments. They're actively working to decouple digital privacy from traditional identity-linked services, giving users a much more comprehensive privacy package.
Okay, let's shift gears to Section 4, Cultural and Structural Lock-in, focusing on sovereign strategies.
You know, crypto is rapidly becoming normalized on two entirely different fronts. At the sovereign level, we're seeing nations like the Czech Republic beginning to actively diversify their national reserves with Bitcoin. But then, on the totally opposite end of the spectrum, mainstream entertainment is embracing the culture. We've got indie films like Self-Custody landing on major streaming platforms like Amazon Prime. This points to a powerful paradigm shift. Future retail re-entry might actually be triggered by everyday cultural familiarity, rather than everyone just chasing green candles on a price chart.
Let's look a bit closer at the sovereign side of that equation. Analysts are increasingly viewing this sovereign Bitcoin race as an escape plan for nations fleeing a fractured global financial order. As countries like the Czech Republic adopt Bitcoin at a state level, experts suggest it creates a fundamentally different type of market support. It builds what they call a non-reactive capital floor. Basically, it's a foundation of demand beneath the market that regular retail panic simply cannot break. These nations aren't day trading. They're holding for structural security.
And over on the cultural side, just look at that indie film Self-Custody streaming on Amazon Prime right now. It's this taut 31-minute action thriller about a father's desperate struggle to recover a $14 million Bitcoin fortune lost to a forgotten treasure pin. I mean, anyone who has ever been locked out of their email can probably feel their blood pressure rising just thinking about that. But the fact that the highly specific, often incredibly stressful realities of hardware wallets are now mainstream entertainment, that's just digital asset culture is being permanently woven into the public consciousness.
Finally, we arrive at Section 5, the bottom line. Let's talk about what's next.
Despite the somewhat stagnant retail viewership numbers we've been seeing lately, the underlying data is telling a surprisingly bullish story. The founder of the Capriole Fund points out that key on-chain and technical metrics are finally beginning to turn positive. The data strongly indicates that the market is tightly coiled for a macro catalyst. Think about it. We're sitting on that non-reactive sovereign floor we just talked about, and the infrastructure has been heavily upgraded by massive institutional acquisitions. It's like a coiled spring. Ultimately, while the agentic economy, high-utility altcoins, and specialized privacy tech are confidently leading the charge today, the broader market's next true phase really depends on the heavyweight. Keep your eyes squarely on that 200-day moving average. The real question you should take away from this explainer today is this: when will Bitcoin finally clear that $80,000 hurdle to decisively signal the end of this consolidation phase? Because when that macro catalyst finally hits, you've got to ask yourself, are you positioned for the fallout,